Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, Wall Street is back, but in a restrained mood, concerned where the Fed is going. Commodity prices are weaker, bond prices are higher, and the US dollar is exhibiting a bit of a risk-off tone. Equities are little changed as traders return. But first up today, there was another dairy auction this morning, after a 3-week gap this time. And this commodity isn't being hurt. Prices rose 4% overall in US dollar terms, although they were only up 1.2% in New Zealand dollar terms, held back by our firming currency. This was a popular event with the most bidders in more than a year. The key whole milk powder product rose 3.3%. Skim milk powder was up 7.3%, and both butter and cheese each rose about 4%. This also comes as the second firm auction in a row, bolstering the notion that dairy prices may be on a rising trend. In the US, their Logistics Managers Index stayed unusually high in August, indicating continuing expansion of supply chain networks. It reflects firms stocking up on inventory in advance of the fourth quarter and is a global feature. Exports from China surged almost 26% in August 2021 from a year earlier, far above market estimates of a 17% rise and accelerating from a 19% rise in July. This is consistent with the strong demand we're seeing in both the US especially, but also the EU. With exports this strong and factory activity quite weak, it does indicate that domestic Chinese demand for manufacturing goods must be really struggling. But imports were strong to China too. Taiwanese exports also stayed high, but their imports were even stronger. Taiwanese exports will get a value boost as the world's largest chip maker is pushing through higher prices. In Europe, their second quarter GDP has been revised higher. German industrial production in July was reported better than expected, although the expansion was pretty modest, to be fair. In Australia, their central bank stuck with their decision in July to taper its bond purchases from $5 billion to $4 billion per week. But in extending the review date from mid-November to mid-February, it has effectively lifted the purchase it is likely to have expected by around $15 billion. The US Treasury 10-year yield opens today at just on 1.37% and up 4 basis points. And the price of gold is much weaker, down by another $26 and now $1,797 an ounce. And oil prices have fallen by $1 a barrel, so in the US they're just under $68 a barrel now, while the international Brent price has dipped to just on $71 a barrel. And the Kiwi dollar opens today at 71 US cents and 40 basis points softer than this time yesterday. Against the Australian dollar, we're holding at just on 96 Australian cents, and against the euro, we're softer at 59.9 euro cents. That means our trade-weighted index starts today at just under 74 and still right at the top of the range of the 72 to 74 range we've been for the past 10 months. And the Bitcoin price has slumped overnight, down 9.1% from this time yesterday to $46,965 and decapitating the big gains of the past week. This is the biggest loss since May and was driven lower by margin calls as the declines mounted. Volatility in the past 24 hours has been extreme at plus or minus 11.6%. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.